This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
It's great to have your company here on Business Now. Now, for the first time this year, we're checking auction markets just to see how many properties are selling around the place. So across the country, there were 1,379 auctions, according to REA Group, with a little over 56% of those sold. In Sydney, 319 auctions, just over 60%, 60.2% sold, which, look, to be honest, is better than it was late last year. In Melbourne, 375 auctions, more than two-thirds of those were sold, which is a definite pickup from a softer market late last year. In Brisbane, just 86 auctions, 58% of those were sold. Adelaide, look, it remains the strongest market in Australia, 99 auctions, almost three-quarters of those were sold. And in Canberra, 88 auctions, a little over two-thirds of those were sold there as well. And let's bring in here Eleanor Creagh, Senior Economist with the REA Group. Eleanor, welcome to a new year. Look, over the weekend, property values for January came out from PropTrack. Prices clearly falling in some key states right now.
Yeah, so we've seen nationally the second consecutive month of home price falls. I mean, pretty small falls, just 0.08% decline nationally throughout January. Some of the other capital city markets are recording slightly larger declines. So it's really the capital cities that are leading those price declines, with the combined capitals seeing a 0.16% decline in January versus regional markets where prices are actually still lifting. So out of the capital cities, it's Hobart, Melbourne and Sydney that are leading the price declines, but there were some capital cities that bucked that falling price trend, with Brisbane seeing a small lift in home prices, 0.08% throughout the month of January, and Perth prices flat through the month.
Is there any correlation in the economic outcomes right now of those cities which are falling in price versus those which are rising?
I think when we look at the cities where we're seeing prices falling, it is a bit of a mixed bag. So we know that Sydney, it's really those affordability challenges that are front and centre for buyers. Sydney is our most expensive capital city market. Affordability has deteriorated significantly. Mortgage interest rates are a lot higher. Home prices are a lot higher than they were, say, 5 years ago. And growth in household income simply hasn't kept up with either of those increases. So affordability is at a record low. But on the other end of the spectrum, we've got Melbourne, where actually affordability isn't quite as bad as Sydney, but price momentum in Melbourne has been weaker for quite some time. So it's really a continuation of that trend in Melbourne, I guess. So the other capital city markets kind of joining that trend that we've seen in Melbourne for much of the past year with that weaker price momentum.
And do you sense that any of this would be improved if the Reserve Bank did cut interest rates in a couple of weeks' time?
Look, I think certainly when we do see interest rates move lower, we know that affordability will improve slightly. Maximum borrowing capacities will be increased. And of course, you'll get that lift to buyer sentiment or confidence. So I think it's likely that this dip we're seeing at the moment or these price falls are going to be pretty short-lived. But on the flip side of that, we've got to remember that the rate cutting cycle that's going to begin probably that's going to begin this month is going to be quite shallow. So the uplift on prices isn't going to be that material, we don't think. And particularly when we put it in the context of this very stretched starting point for affordability, it's very unlikely that we're going to see a material uplift in the pace of home price growth. We'll probably see quite a modest pace maintained, certainly relative to the pace of growth that we've seen over recent years.
Indeed. Eleanor Creagh from REA Group. Always good to chat to you, Eleanor. We'll do it again very shortly.